The Treasury Department and the Internal Revenue Service released updated information last week on stimulus disbursements that were part of the $2 trillion CARES Act. According to their report, over 130 million individuals have received payments worth over $200 billion in the past 4 weeks. While many received correct payment amounts, others received disbursements that were lower than anticipated. There has been enough confusion that the IRS issued a press release today detailing common scenarios that may explain why the amount received may differ from the amount expected. The IRS notes that payments should be automatic for eligible individuals who filed a 2018 or 2019 tax return. In many cases, the IRS will revert to the 2018 tax return to calculate eligibility and amount of the economic impact payments, commonly referred to as stimulus payments. These include, this is important because life changes, including having a baby in 2019 or fluctuations in income, may not be reflected in the payment individuals received. In these cases, the IRS guidance is to claim the additional amount on your 2020 tax return, not a terrific answer, but an answer nonetheless. Another reason there may be a mismatch is that claimed dependents may not be eligible for a $500 payment. The IRS notes that only children eligible for the child tax credit qualify for the additional payment of up to $500 per child, and that to claim the credit, the taxpayer generally must be related to the child, live with them more than half the year and provide at least half of their support. There are other factors too. Any qualifying child must, moreover, parents who are not married to each other and do not file a joint return cannot both claim qualifying children as dependents. The IRS will use tax return information to see which parent claimed a child and send the additional $500 payment to that person. If you were expecting a payment for a qualifying dependent child, you may want to double-check the above criteria. A common scenario appears to be believing that college students qualify for additional stimulus payments just because parents claim them as dependents. The IRS notes that according to the CARES Act, these students would not qualify for the additional $500 payment. The IRS gives an example of a 20-year-old full-time college student who is claimed as a dependent on a parent's 2019 tax return. The student is not eligible for the $1,200 stimulus payment because they were claimed as dependents, and the parents will not receive an additional $500 stimulus payment for the student since they are over the age of 17. The IRS clarifies that, if the student cannot be claimed as a dependent by their mother or anyone else for 2020, that student may be eligible to claim a $1,200 credit on their 2020 tax return next year. Remember that if a dependent is 17 years or older, they won't qualify for the additional $500 stimulus payment.